Reading some of the notes you shared with us, you said that the market is aggregate expensive. What do you mean by that?
Well, when you look at earnings, not on 21 earnings, but on 2022 earnings, the S&P 500 at 20 times 2022 earnings on historical context is quite expensive. But what I would say is that level of expensiveness, if you will, is really concentrated in a couple of areas, whether it be Apple that used to trade for 15, 16 times earnings and now trades for 30 times earnings, or Tesla or SaaS software companies, or on the other side of the spectrum, cyclicals that are pricing in a very, very good recovery. But there are parts of the market, whether that be utilities, whether it be GARP stocks, or even financials, and in particular banks, where you see pretty good value, not only relative value, but actually good absolute value as well.
What about the U.S. versus the rest of the world at the moment?
I tend to actually favor U.S. stocks over international stocks. Obviously, we've had a period of time where the dollar has been a little bit weak, but I think an investor owning U.S. stocks gets a much better group of companies, a much better index, if you will, with a lot better just fundamental companies, whether it be tech titans, whether it be a higher proportion of the portfolio that is in kind of GARPy kind of stocks that we kind of like on a long-term basis. And also you get a lot of international diversification as a lot of those companies generate, 30% of their revenues or more outside the U.S.
Shepard Smith here. Thanks for watching CNBC on YouTube.